Alright children, today we are going to start with the next concept, net indirect tax. Now what do we mean by indirect tax? As you know, nowadays all indirect taxes comes under what we call as GST. So indirect tax, what is indirect tax? It is a compulsory payment which we know tax is a compulsory payment, and indirect tax is one which is imposed by the government on production and sales of goods. Alright. Say for example now, when an indirect tax is imposed, alright, with imposition of indirect tax, what happens to cost of production? Cost of production rises. Yes? So even when indirect tax is imposed on sale of goods, the price of the good will rise. So with imposition of indirect tax, let's take an example. Suppose a good was produced, okay, a good was produced worth rupees 500, and now there is an imposition of indirect tax of 10%. Alright, a good was produced which is worth rupees 500, and then the government has imposed a tax of 10% on it. So what would be the price of the good would rise and it would become 550. Yes, so we see that there is an increase in the price of the good. Okay, so that is indirect tax. Alright, it is something imposed by the government which increases the price of the good or the cost of production. Now at the same time, we know that the government also provides economic assistance. The government also provides some financial help to certain enterprises, to some enterprises on production of certain goods. For example, we know we have the LPG subsidies. Alright, similarly the farmers, they were provided with subsidized electricity, subsidized fertilizers. Alright, so with subsidies now, subsidies is a help that is given by the government to certain enterprises or to certain producers for production of certain goods. Now with subsidies what happened? The cost of production or what we say as the price of good, will it fall or rise? It will fall. Alright, so in that case this will fall. Now suppose, let's take this example only. With the imposition of indirect tax of 10%, 500 good now becomes 550, and now suppose at the same time the government is also providing a subsidy of rupees 10. A 10 rupees subsidy is given by the government on the sale of this product or on producing this product. Then what will be the price of this good now? It becomes 540. Alright, so indirect tax, as it is imposed, the price increases. Subsidies, as it is provided, the price is reduced. Now what is net indirect tax? Alright, I hope you have understood this. Now coming to net indirect tax, in short we write it NIT. NIT refers to indirect tax minus subsidies. Okay, it refers to indirect tax minus subsidies. We get the net indirect taxes. Alright, now how is this net indirect tax important? Okay, this is very important. What is NIT? NIT equals to indirect tax minus subsidy. Okay, now moving to the concept of NIT, why is it important? It is important to differentiate. It is important to differentiate between factor cost and market price. So when we will be calculating GDP or when we calculate GNP, okay, we will see that we take it like this: GDP at factor cost. Alright, now what is GDP at factor cost? Or sometimes we calculate it this way: GDP at market price. Okay, now what is this factor cost? What is this market price? This difference between factor cost and market price is all brought about by this component NIT. Alright, now for example, when we take a thing at, suppose we are calculating GDP at factor cost. Now what is factor cost? Okay, coming to the next topic, what is factor cost? Factor cost, it refers to the amount paid factors of production on producing the good. Okay, on producing the good. Alright, so that is called factor cost. And now what is market price? When we are calculating national income at market price, what does market price mean? Market price means the value at which the good is sold in the market. Okay, so when a good is sold in the market, it is always inclusive of taxes. Alright, and when the good is sold, the tax is there. Okay, and then maybe subsidies also will be imposed. So subsidies is provided. So we take net indirect tax, and this brings difference between factor cost and market price. Now how does it bring difference here? Say for example, if we have GDP at, if you want to find out GDP at factor cost. Alright, how will we find it out? We will take, suppose, GDP at market price. Market price is definitely, this value will be more than this, more than factor cost, because here we are taking the net indirect taxes. Alright, so as taxes imposed, price rises, but of course subsidies is provided. Alright, but then if subsidies is less than indirect taxes, then definitely the price will rise. Yes or no? Say for example, if it is a situation like this, indirect tax is 10, subsidy is also 10, then net indirect tax is 0. But suppose in a case, indirect tax is 20 and subsidies is 10. Alright, so what is the net indirect tax? 10. So the factor cost, GDP at factor cost, when it becomes GDP at market price, by 10 rupees it will increase. Yes. So GDP at market price and GDP at factor cost will be same when NIT is 0. Yes or no? When NIT will be 0, in that case it will be same. But suppose if it is not same and we have to find out what is GDP at factor cost, how will we do it? GDP, the relationship is GDP at MP minus NIT. Alright, minus NIT. Suppose this was of 200 and this is supposed to 20. Alright, why is it more here? Because there was an imposition of 20 rupees of NIT. So when 20 rupees NIT is subtracted, we get back again 200. Alright, so the difference, this is the relationship. Alright, look at this relationship. GDP at factor cost equals to GDP NP minus NIT. Similarly, if we have to find out GDP at market price, what is GDP at market price? It is GDP at factor cost plus NIT. Okay, so this relationship is very, very important. Alright, that differentiate between market price. So what difference between factor cost and market price? The difference between factor cost and market price is brought about by net indirect taxes. So we got the definition of, we already know what is an indirect tax. We know what is subsidy. So the difference between indirect tax and subsidy is NIT. Alright, we always take NIT. Why? Because something is imposed and something is provided. We will take the difference. Alright, the actual impact. What will be the actual impact? And that actual impact we subtracted to get from GDP MP to get GDP FC. Alright, so this relationship is very, very important now again. When you write it in your notebook, you put it in a box like this. NIT equals to indirect tax minus subsidy. Indirect tax helps in differentiating between FC and MP. So GDP at FC equals to GDP MP minus NIT. GDP MP equals to GDP FC plus NIT. Right? So this concept is very important. Okay? So you will go through it, pause it, write down the explanatory notes, and then in the next video we will take up the next topic. Alright? Thank you, children.